Hi, everyone. Thank you for joining us. I'm Melany, and I am one of the performance marketing specialists here at livrent. And today I will be co-hosting this webinar with Katie, and we're going to talk about the many different aspects of real estate investing. Thank you for joining me today, Katie.
Hey guys, thank you for finding time to join us. I'm Katie Shen, Mortgage Consultant with DLC Elite Lending. My specialty is residential and commercial mortgages, and today I'm glad to join livrent webinar and chat about financing options for investment in real estate together with Melany.
Of course, we're excited to have you here. We also run these free and informative live webinars every couple of weeks to help support our community of landlords and renters navigate the rental landscape. So for today's topic, it is Rental Property Investing 101, tips on how to get started. So we're going to go over a few of the most successful financing strategies in real estate investment, plus how you can optimize your existing mortgage for seasoned investors. And we also have some tips on how to get started if you're thinking about getting your first property. And today we are going to break it down into 4 parts. So part 1 is why invest in real estate. Part 2 is investment strategies and approaches. Part 3 is financing options. And for part 4, the must-have investment tools. And we're actually going to get started on the fun part first. We're going to take a look at the audience and see who's here with us today. And based on the Eventbrite registration survey, we have 39% of you guys are already landlords, 11% are realtors, and 19% are renters. And about 43% of you guys actually manage 1 to 5 properties already, and a whopping 49% have no properties. So I think the webinar is actually perfect timing. Katie, do you have any thoughts?
Absolutely. I think we will have a lot of great information for those who just want to get their feet wet with real estate investment.
So to make the most out of your experience for this webinar, please remember to turn off your ad blocker. And if you haven't yet, create an account so you can unlock the side panel features and join in on the conversation in our live chat. The live chat panel is your place to introduce yourself, let us know where you're from, ask us your questions for the live Q&A at the end of this webinar. It is on the right-hand side of your screen, and we have livrent agents that will be answering any immediate questions that you may have. And please don't forget that we are also giving away 2 $50 Amazon gift cards to a couple of lucky winners. So to enter for this, you have to navigate to the giveaway panel on the right side of the screen, complete the prompted actions, and then click submit. And it's as simple as that. So each completed entry is an additional entry, and we're letting you have up to 5 entries in our giveaway. We are also going to be running some polls and trivia throughout the webinar, so make sure to participate and have your say. We're actually going to run our first one right now. So we want to know, what are you currently investing in? This is actually a great question to start us off. So let's get started. Katie, why would someone look to invest in real estate right now?
Absolutely. Real estate is considered one of the least risky investment opportunities today because liquid assets are depreciating in the current economy.
That's actually interesting because at livrent, we've been getting really excited about Bitcoin recently. We just launched our new pay by Bitcoin feature, so our renters can pay in Bitcoin while the landlords get fiat or the Canadian currency. But the Bitcoin market is quite volatile, as everybody knows. So what makes other investment opportunities more risky than real estate?
Yes, absolutely. That brings me to my second argument. Other investment opportunities lack transparency of the actual state of publicly traded companies. It is questionable if they will be able to stay afloat when government support dissipates. There are also emerging risks of surging inflation and worry that massive government stimulus, both in the form of fiscal spending and monetary policy easing, is overheating the economy right now.
Sounds like you might have a crystal ball here. So is the real estate market going to stay hot, or is it going to start cooling down?
No crystal ball, Melany, but my next point is analysts expect the real estate market to continue being active and prices to climb. And right now, housing is booming, if not overheating, despite all the previous pessimistic predictions. One key reason why there has been a dramatic shift in preferences toward more space further outside major urban centers. Commuting requirements are down and probably assumed to remain down.
Definitely. And I'm just going to echo what you said because at livrent, we produce monthly rent reports for Vancouver, Toronto, and Montreal. And we did notice a trend where rent in the downtown core was falling a lot faster than anywhere else. So that shift in preferences for larger spaces happened for renters as well, especially for those working from home professionals. And there's this huge plot twist where we thought we'd all just go back to normal, but we're not all going back to office all at once, and some may never want to go back at all. So we also see this demand staying around for a while as offices transition into a hybrid or remote first work cultures. And we do publish our rent reports each month on our blog, so it is free for the rental community. So I hope you're actually on the mailing list, Katie. But back to the housing market, do you think it's growing lately?
Well, absolutely. I have also shared the rent reports with my clients. It's the best reference to determine what their optimal rent level to list a vacant unit and navigate rent increases if necessary. So I can reference house prices and listing reports from realtors in Canada's 11 major cities. The prices rose by 9.36% during 2020, which is 8.33 when adjusted for inflation. And that's the highest growth since 2016. This is the 12th straight year of house prices growth. So the prices are still expected to climb as demand is higher than supply in the major urban cities. And even with the borders still closed, we see increased immigration numbers, and quota for that was raised back in 2017. Immigration haven't slowed down even during pandemic. But on top of the growth, real estate investment also is the opportunity for you to write off expenses, especially from rental properties.
Mm-hmm. Yeah, and there can be some tax savings in there too. And earlier this year, I did speak to a CFP and investment property advisor about rental property deductions at another webinar. Guys, you can actually watch that replay on our YouTube channel to learn more about taxes. We're actually just going to check in on what our poll results were. We asked everybody what everyone was, where was everybody at for their real estate investment? So let's see here. So 67% of the audience actually answered that they're in cryptocurrency. I mean, no surprise there. Thank you, Elon Musk, for that. And 33% of the audience answered that they're actually in stocks and bonds, probably the AMC, shenanigans that was happening earlier this year. Do you have any thoughts on this, Katie? Any surprises there?
Well, not much surprises. As you mentioned, that interview Elon Musk gave to Marilyn Dennis the other day,
Yeah.
created some stimulated some increase in interest. So no much surprise there. But
Sure.
hey, it's good to know where our audience is at.
Mm-hmm. For sure. They're definitely getting their feet wet. And we're actually going to get right into Katie's investment strategies and approaches. But before we do that, we're actually going to run our next poll. We're asking you guys, what is your current real estate investment strategy? And if you don't have one, don't worry. That is why we are here today. So back to Katie. I know you have some key strategies to share with us today. I'll let you go. I'll let you go introduce the first strategy and share it, what it is and what the benefits and drawbacks are, and I can jump in on and show you how livrent can help maximize these strategies. So let's get the first one started. What is it, Katie?
Absolutely. One of the most common scenarios for my clients, and that's what they typically come with. It's quite popular these days to continue renting in the close proximity to work and cultural center and have investment property in the areas with high return on investment potential. And the benefit of it is this, definitely it's a second source of income, or as we call it, passive income nowadays. We love it. We don't want to have second job. We want to have passive income. The most obvious gain is the extra money client will be receiving each month. This money can help to pay out mortgage, property taxes, or other bills, or pay for own rent if client continues renting closer to work or a cultural center, or maybe even invest more in cryptocurrencies. Renovations will increase value. Aside from the monthly payoff that client receives from new tenants, the renovations that they make may also be a future investment. Tax deduction, opportunity to write off expenses from taxes and use other tax deduction strategies not available for the other investment options. And of course, even if you buy investment property first, it doesn't mean that you won't be eligible for the first time buyer program anymore. You can check and verify that on CRA website, which says that you are considered a first time home buyer if in the 4-year period prior to home purchase, you did not occupy a home that you owned. So again, all benefits all the way. There are a couple things which one has to keep in mind when they invest in a rental property. Investing is a responsibility. First of all, it is an investment before it is a benefit. Knowledge and efficiency are required to manage tenants. And second of all, account for cost of maintenance and sales. Potential future sales also has to be considered. There are also certain approach and calculations for potential capital gain and taxes on that. So I always recommend my clients also consult with an accountant in that regards.
Great. And livrent is ideal for first-time property owners and landlords. We do provide a ton of tools and educational resources, and most of the time they are free. So even if you're worried about that you can't do it yourself, you can, and we do provide tips, walkthroughs, and training, so you have everything you need to start your first rental journey, from listing to drafting your rental agreement. And the best part is that you can try it for free again and book an educational session at any time.
Well, can't agree more, Melanie. Tools and resources are what a newbie investor is often lacking. I see it as an industry insider. Those of my clients who invested in knowledge and property management tools are way more successful and have much higher return on investment than those who took ad hoc, old school kind of type of approach.
Yeah, exactly. The market's changing, so why not change with it, right?
Absolutely.
Yeah. So what is the next strategy that we're going to be looking at?
The next strategy, which is also quite popular, renting part of your property, or as East Coast used to say, and it's a very popular term there, house hacking. We don't quite use it here in BC, but hey, industry is changing, right?
Yeah.
A strategy that involves renting out portion of the primary residence. Sometimes it's just renting one floor, or maybe renting out a laneway home. It's the most cost-efficient option to get feet wet with the rental property, because lowest interest rate are applicable for primary residence rather than rental property. Opportunity to have tax deductions, opportunity to overall house maintenance expenses deduction. Of course, they are proportionally deducted towards the rented portion, and minimize the capital gain. The disadvantage, well, it's really hard to come up with any drawbacks for this type of strategy, especially from financial perspective. I would say consider if you're comfortable to live with another family, share the roof, and make sure you maintain the property with a positive cash flow. So have right tools in place and use the right resources, and you won't face any concerns.
And at livrent, again, it is a valuable tool here for this strategy, because if you're renting out your basement suite or an extra bedroom, then you probably want to make sure that you like this person and that they're probably trustworthy, hopefully. So our automated tenant screening tools and processes come in really handy here. So we do have suggested tenants. As soon as you publish your listing, you'll get an automated list of suggested tenants whose preferences match your unit. So you can send them a message, invite them to apply to your home. We also have the Liv score. It is a more comprehensive than your average credit check. We use a soft Equifax report in conjunction with an AI algorithm to rate tenants in terms of financial fitness and trustworthiness. We also have the application summary. This is one of our most popular and favorite features among our landlords, actually. We package all the relevant renter information into a concise application and make it easy to compare this. So that way, when you're making your decision, it's easier to read. Moving on to our next strategy, though, what's our next approach, Katie?
Short-term rentals. Quite often we call them Airbnbs, but even though we reference them as Airbnb, there are also other platforms which maintain the same approach and offer similar services. Vacation rental by owner or home away are similar platforms. Short-term rental, they become incredibly profitable and as a real estate investment niche. And that's either vacation rentals or just furnished properties that are rented out for a short period of time to guests that won't be in the area for very long. So one would say less risk or different type of risks with that type of tenants. Usually owners will rent their properties out on a nightly or weekly basis, and that brings higher revenue, flexibility for property use for own purpose, higher write-offs, tax deductions, high earning potential, and if you use automated technology. Something to consider with this strategy: more time consuming and labor intensive, inconsistent income, higher tiering wear, and of course high competition. The owner has to constantly compete for a new tenant and has to spend an extra buck to furnish the place.
Mm-hmm. You can also manage your short-term rental on livrent. In many ways, we're the best rental platform for people who are coming from outside of Canada or renting their first Canadian home. Our application process creates a level playing field because users can select if they don't live in Canada or if they're a first-time renter on their application. So this actually gives landlords the full picture with lots of supplemental documentation in their application. And our digital rent payments lets people from other countries pay their rent even if they haven't gotten a Canadian bank account yet. So all great things.
This is awesome, Melanie. It's a great opportunity for any landlord to minimize vacancy by combining different rental strategies on the same platform. It's efficient and seamless.
Mm-hmm. I know you have one major final strategy to share with everyone today. So can you tell us about the flip?
Of course, it's a great opportunity to buy properties at a discount, do a little bit of work, and sell them for a significant profit. Potential is to make a good profit. The most obvious reason for flipping a house is to make money. For companies and individuals that do that full time, flipping homes is a great strategy. Not only can an investor make significant returns on investment, but turn around relatively quickly, given the right scenario. There are great mortgage scenarios to make this type of investment highly efficient. And considering the right tax planning for the strategy, it is highly profitable, especially in the current booming real estate market. Of course, there are a couple drawbacks. There's also potential to lose money. No rewards come without some degree of risk, efforts, and knowledge. Also, it's a great opportunity to make a lot of money quickly, but one needs to have skills, knowledge, resources, and funds in place. Seek out advice and knowledge from a quality resource. Do proper research and regulations about the code and standards before you even start.
Mm-hmm. Thank you, Katie. And I'll just say that if you do have the capital to invest in flipping a property like this, you might want to consider keeping it instead of selling it. For example, if you renovate an old home to have an updated kitchen, bathroom, new appliances, and do some cosmetic fixes, you'd probably be able to rent it out at a better rate than you would before you did the renovations. So in this scenario, you can use livrent, rent out your place, and then continue to maximize your ROI, really. So let's actually check in on our last poll and see what your current real estate investment strategies are. See here. So 45% of the audience voted that they actually buy and hold. 36% of the audience said that they're doing other things or that they're new to investing. Again, our timing is very impeccable here. And 14% of the audience voted that they're actually doing house hacking. So maybe it's not that rare here on the West Coast. Any thoughts, Katie?
Yeah, well, definitely house hacking itself is not rare. It's just the term itself, which we are not used to hear quite often here.
For sure.
I would say, in terms of the results of the poll, I would say one size doesn't fit all. There are definitely different strategies. It doesn't mean that one strategy is better than the other. It means that one will fit your risk appetite better than the rest of them.
For sure. So let's actually move on to our next poll. So definitely let us know what kind of tools, services, or experts are you using the most as part of your real estate investment? Now, Katie, I think the financial aspect of real estate investment is really one of the most key things here. Can you go over a little bit about mortgages and what kind of financing options are available for people who want to invest?
Absolutely. That's one of the main things a potential investor would consider, how much they have to spend on the financing. So conventional mortgage is a typical program for rental purchase. It requires 20% down payment, and typical different types of incomes can be eligible for that mortgage. Salaried, or we also call it employed, self-employed, in spite of common perception that self-employed professionals are not eligible. It's not quite accurate. They also can qualify, and there are programs for that too. They also can qualify for a high ratio mortgage. So incorporated income is also considered eligible: long-term disability, spousal support, and rental income. That's just in a nutshell.
Yeah. So a 20% down payment sounds like a lot, especially for a place like Vancouver. Is there another option than the conventional mortgage?
Absolutely. Quite often my clients purchase primary residence, and then they eventually later down the road rent it out as they develop their investment portfolio. So the high ratio or first-time buyer property purchase comes with a 5% down payment. That's a minimum for the first 500,000. And then additional 10% is required on the remainder up to 1 million purchase price. There is also government incentive available in addition to that program. Government incentive will top up 5% on the secondary market, or 10% for the newly constructed homes. Buyers need to have their own 5% savings for the down payment, so that still stays. And there are limitations for qualifying income and total borrowing amount. So the program has pros and cons. I talk about it in details and provide calculation examples in numbers during my webinars. And I will share more information how you can register for that at the end of this session. Stay tuned. Besides high ratio program, there is also Purchase Plus Improvement program, which allows clients to borrow the cost of renovations up to a certain percentage and add it to one easy to manage mortgage payment.
Okay. And what is an interest-only mortgage?
Interest-only mortgage, that's a mortgage which is mostly beneficial for investment property, because that's when client wants to maintain just debt service the credit and eventually sell the property. There is no aim to keep the investment property in the long run. The interest-only mortgage, so that's typically either private mortgage or a product called home equity line of credit. That's a credit line which is registered on the property. The requirement for that type of product is that 35% equity stays in the property, so it cannot be cashed out or withdrawn. The types of purchases which will benefit from program is where there is an opportunity to write off interest from taxes, and that's where basically the benefit comes from. Whatever you pay yourself, you can write off. There's also an option to optimize cash flow for that and reduce out-of-pocket expenses. As we can see the calculation on the slide, there is an example that shows interest-only mortgage structure, which allows to optimize cash flow for 30%, comparing to conventional mortgage, which we discussed earlier. The calculation is just an example. It's not an offer, and the interest rate is calculated for the sake of just the sample, the client still has to qualify for lender guidelines and requirements to get this type of product.
Awesome. Thank you. There's definitely a lot of terminology here. Can you let me know what the definition of equity is and how is it different than an IRR?
Absolutely. Monitoring the performance of investments like stocks and bonds is relatively simple. On any given day, investor can log into financial news website or their brokerage account and see how their portfolio performs. Real estate, however, is a private asset that doesn't afford the same daily visibility into pricing and performance. So one of the most common accepted ways to gauge the profitability of real estate investment is by calculating its internal rate of return, or we also call it, there is an abbreviation for this metric, IRR. It's a complex formula which factors lifetime of investment and annual property appreciation. So the other metrics an investor typically considers is first year cash flow divided by total cash required to close. And equity metric, which also allows to compare cash flow before financing. So cash flow a property brings without paying mortgage as if it's already paid out, divided by purchase price.
Awesome. That's awesome. And so we're actually just going to check in on our last poll now. So let's see here. We asked you guys what kinds of tools, services, or experts are you using the most as part of your real estate investment strategy? And 42% of the audience actually use their realtors. 33% of the audience use apps and software, and 17% use property managers. Not really surprising. What do you think, Katie?
Well, I would say that a good portion of our audience is tech savvy, and I really respect that. And the rest of the audience relying on professionals, which is a good thing. And my clients quite often, when they come and look for professional advice, they also ask for a good contact, and quite often I introduce them to realtors myself.
Yeah, that's awesome. It's great to have both, you know?
Absolutely.
So thank you everybody for your votes. Remember to add any questions that you have in the live chat as we go along, and we'll come back to them during our Q&A session. And we're actually going to run our last poll right now. So let us know, what's the biggest obstacle for you when it comes to investing in rental real estate? Katie, let's get back to the financing and talk about long-term and short-term. Is there a difference financially? Can you talk about the differences between these two approaches and how I might figure out which one is better for me?
Absolutely. One of the obstacles I quite often see, which newbie investor face, and they don't realize it themselves, they mix short-term and long-term strategies in one. So they consider buying a primary residence and then eventually rent it out. And they have a long list of requirements, which is really hard to satisfy. Also, financing options and mortgage payout strategies are different. As we already discussed, there is interest-only option for investment, and there are other programs which we can benefit from better if it's a primary residence. So I always recommend separate the two, filter out the requirements, and focus on the short term. It will help you determine the right purpose and the strategy, and choose the right strategy to estimate cash flow. And most importantly, get pre-approved.
Yeah. So what does getting pre-approved mean and why would it help? Probably a good tip for me last year, but anyway.
It's a good tip for everyone, Melany.
Yeah.
You'll save time house hunting, seeing only houses you can afford. You'll have better idea for your monthly payment amounts and down payment. Real estate agents may serve you better because you're committed and they know you're serious and ready to buy. And most importantly, your pre-approved status may give you more negotiation power with the seller. There's no cost to you, and you're not obliged to commit to the specific lender at the pre-approval stage.
That's awesome. And I love that there's no cost or obligation to getting a pre-approved mortgage. So are there any other tools or tricks that can help me figure out how much money I'll be spending on a property?
Absolutely. It's important to estimate the cash flow accurately, I would say. Quite often clients start with out-of-pocket expenses. They disregard tax deductions, and it's important to remember that's a good opportunity to actually balance your cash flow and benefits of different rental strategies for sure.
Mm-hmm. So going back to the mortgage options that we went over earlier, what mortgage is best for long-term versus short-term strategies?
Depending on the long-term and short-term strategy for the property, there can be different programs considered in different types, as you said. So interest-only payment, as we discussed, or a private mortgage can tailor better and will be more applicable for a rental purchase. So does conventional mortgage. First-time buyer program also goes well with those clients who have minimum down payment. Every buyer or investor also need to consider and account for potential penalty payment if they're planning to sell property in the nearest future.
Okay, well, thank you, Katie. We covered a lot of ground here today. So, guys, if you have any questions for our expert, let us know in the live chat, and we'll try to come around to it at the end of our Q&A, and we'll share with you how you can get in touch with Katie as well. We're going to take a look at the results for our last poll. So when we asked you guys what the biggest obstacle is for you when it comes to investing in rental real estate, 59% of the audience actually think the biggest obstacle is financial barriers. 14% said that they're not sure how to be a landlord, and 9% said they don't have time to be a landlord. Any thoughts, Katie?
Well, I hear from my clients when they're, especially those who are buying first investment property or first property in general, that they feel that mortgage may become a financial burden, or they see a financial barrier to save for a down payment. There are definitely tools and instruments to apply for that, and I discussed that more in detail during my webinars, but I think livrent also offers a great portfolio and helps newbie investors to find the right approach. So that's a great opportunity to consider.
Yeah,
Great tool.
and anything you do the first time is a little bit daunting, but after you do it for a bit, it's not that bad.
Absolutely.
So let's go to our fourth and final part of our webinar, the must-have investment tools. Katie, can you actually tell us a bit about your app?
Yes, as you mentioned already, and as we see in the poll results, financial barriers, it always makes sense to filter that down and understand what does it speak to. So I always recommend my clients to get used to my app, because for each and every specific listing, a client calculates at least six mortgage scenarios. So they compare 5% down payment insured mortgage with 20% uninsured. They compare different amortization schedules, 25 versus 30 years, and they also compare fixed versus variable, and that's for the same listing. That's a lot of numbers, and the app has several tabs. My favorite tab is mortgage calculation, where a client can play with the different scenarios and compare them side by side, and even see a split of principal and interest and balance over the mortgage after 5 years. There's also a property transfer tax tab, where a client can see if they are eligible for to waive the property transfer tax, and if not, how much they will need to pay. And also closing costs to calculate what are the other expenses they will have in addition to down payment.
Awesome. And of course, we do have our own app as well. So after you purchased your investment property that you plan to rent out, you can streamline your rental process with the livrent app. So by having the app on your phone, it means you can stay organized and keep on top of your inquiries. And if you are new to livrent or haven't used it before, one of its best features is that it can do the work of an entire marketing team for you and become your rental hub. So no matter where you get your leads, you can actually just bring them back to your livrent homepage, and they can apply through livrent. And this makes it faster for them to get their applications in and easier for you to review them in your tenant screening process. As a performance marketing specialist, I understand that putting some ad spend behind your product is necessary to jumpstart things and help you get the results that you're looking for. So at livrent, we have our featured listings. So if you want to get your unit rented out way faster, I'd recommend giving it a try and seeing the results for yourself. But basically, here's what happens on average. So featured listings actually get 300% more views, 65% more inquiries, and 70% more quality leads. So it's great if you are publishing a listing for the first time, or you really need to get a listing filled in by a move out date. So our team has put together a special 50% off featured listings package for everyone who's here with us today. So definitely try to take advantage of that if you are curious.
Absolutely.
Yeah. So Katie, do you think that some of your clients could use livrent?
Real estate investment becomes highly competitive, and the only option to become financially efficient is to implement smart tools, as we already talked about it a lot, and gain knowledge fast, keep up with the changes and updates. So to answer your question, Melanie, livrent is the most up-to-date and well-rounded solution for all the above, and most importantly, very affordable. I see my clients who have implemented it already, and they wouldn't miss it for the world.
Awesome. Well, thank you so much, Katie, for taking the time to answer my questions today. I'm definitely going to give everybody else a chance to give you their questions now. So I do want to be mindful of everyone's time today. Just a quick note that we are running a little bit longer than we expected. And if you do have to leave before the Q&A, just ask your question in the live chat, and we'll actually follow up with everybody with a one-pager of the event, plus a recording through our emails. So for our Q&A, we have some questions that were pre-submitted before the event. So we will get to it. Plus, we're going to try to answer as many questions as possible in our live chat. Are we ready to answer some questions, Katie?
Absolutely.
Awesome. Okay, so for our first question, this is coming from Carrie. Excuse me. Carrie is asking, how do I maximize lending capability?
Thank you for your question, Carrie. I believe in the scope of this webinar, we talk more about mortgage borrowing capability, because there is also lending opportunity here in Canada. You can be a creditor yourself. So in order to increase mortgage capability, I would say get pre-approved, and we can figure out whether it would benefit for you to pay out debt, or would it make sense if there is a room to improve credit history, because sometimes there can be surprises there, believe it or not. There is a perception quite often clients face that they think they pay bills timely and they have no issues, but occasionally when we look at the credit report, there could be some hardship reflected that. So potentially the property itself can bring a little bit more income, because rental income is considered. If you're considering to buy a property which you will house hack, one of the strategies was discussed today, that's another opportunity to get you to the location you really want.
Awesome. So for our next question, this is coming from Annabelle, who is actually, this is coming from our live chat. So hi, Annabelle. Annabelle is asking, how do banks determine lending power? Are banks more likely to lend for a rental property versus a primary residence, and why?
Thank you for your question, Annabelle. Borrowing power is typically determined basis credit history, income, down payment, and property itself. So all four main factors has some specifics and requirements. Rental programs for rental purchase versus programs for primary residence have slightly different criteria and requirements. So for example, for primary residence, you need to show a little bit longer history on down payment rather than for rental and things like that. So to answer your question, which property banks will lend better on, there is different risk appetites across the board with the different lenders. And that is why it's beneficial to work with a mortgage broker, because broker will know better. Basically, that's what my job is, to find the best fit for your specific case and for your property, and know which bank will have appetite for this specific scenario.
Awesome. So next question here is from Elena, and Elena's asking, what are the first steps for a first-time investor?
I would say for a first-time investor, understand what are the financial options for you. So how much money you can borrow for a specific strategy. Choose a strategy and explore, because if you want to flip a house, you need to have one type of knowledge. If you want to rent out long-term, that's another type of knowledge and resources and tools you need to have in place. And once you figure it out, start shopping.
Awesome. Next question is from Nick, again from our live chat. Hey, Nick. Nick is asking, what's the lowest mortgage rate at the moment for 5 years fixed and 30 years of amortization?
I would say 1.2.
Yeah.
Thank you for your question, Nick.
Awesome. So next one here, is there anything like the 1031 in the US that allows you to defer capital gains in Canada, LLC for rental property? What are the pros and cons for that?
Thank you, Christopher. My internet is a little bit choppy. Can you hear me well, Melany?
Yeah. Did you get the question, or do you want me to repeat it?
The question from Christopher is about deferring capital gain.
Mm-hmm.
Thank you, Christopher, for your question. I would say in terms of deferring capital gain, it would be a question more towards accountant. And I would suggest consult because with an accountant, because there are also different scenarios for that. I will see for rental property, pros and cons. Well, again, that depends on what is the strategy around rental property. Do you want to keep it, or do you want to sell it quickly enough? There is also limitations on the financing for LLC. So that's not the type of question which can be answered in a short, with a short answer. There are definitely pros and cons. And I would say it would depend on the amount of down payment and in the rental strategy.
Awesome. Next one is from James. Out of these 4 investment strategies, which would you say is the most common you see amongst your clients? First property as a rental, house hacking, short-term rentals, the flip. Did you get that?
Can you hear me, Melany? I feel that our chat is really getting busy because my internet connection is getting choppy. Thank you for your question, James. I would say among 4 strategies, it's really hard to say which one is the most popular, because I see different financial portfolios and different people with different risk appetite and financial possibilities. So all types of strategies are here to stay, I would say, and each and every one has their benefits for a specific client. I didn't run a poll on that. I probably should during my webinar.
Awesome. So for the next question, Pavitt is asking, is it better to buy an investment property under an incorporation or as an individual?
Thank you, Pavitt. That's a similar question we saw from Christopher. Again, saying there's no size which fits all. It depends on your financial possibilities and the strategy around the property investment. So what do you want to do with it later down the road? As I mentioned, there are certain requirements to register property purchase on a corporation. So that depends on what the corporation shows and whether that's operational or just a trust. I would say as a residential purchase, banks are quite cautious, and they don't have a high risk appetite for operational corporations. So if you want to register it on a trust company, that's an option, but it also has limitations. For residential, we typically go with individual because that's where we can better build a proper case, business case, basis income and strengths of the overall net worth of the client.
Okay.
But we can chat private. There will be my contacts in the pop-up window, and you can always call me.
Awesome. Next question here is from Lee. And Lee's asking, what are some things to know regarding the transfer of a personal mortgage loan to an LLC that is fully owned by the mortgage holder?
Thank you, Lee. Thank you for your question. It tailors back to the questions about LLC. Again, it would make sense to have a better dive and see what you're trying to accomplish with this. Are you trying to minimize taxes, or you're trying to get a better rate? That would be the questions I have back to you.
Okay. So another question here from Bob. When paying a multifamily property such as a triplex, should I talk to a commercial mortgage agent?
That depends on what's the zoning and how you want to register the property, because it's an option also to buy it as a residential.
Okay. Another question here from Han. Are there options for remortgaging a leaky condo that is going through an envelope repair?
Thank you for your question, Han. It depends on what the stage is. If it's still in the process, lenders typically won't have appetite for that type of property. If it's already completed, we can take a look at the paperwork and see what type of work is done, what's the warranty and things like that, and have a better assessment.
Okay. Next question from Marco. What's likely to happen? Hyperinflation or real estate prices, or crash in real estate prices?
Thank you for your question, Marco. No crystal ball, as we discussed, but that's what everybody wondering about. Of course, everybody want to have a proper forecast in place. And that's the question my clients often ask me. Okay, what will be the property value increase later down the road? Here's the thing, we heard about the investment bubble for years, and always the answer for that was that economical crisis will be a good test run for that. We had COVID last year, the industry was frozen for 2 months in a row, and in spite of pessimistic predictions, we see what is going on with the prices. So we're looking forward to see what will happen when the borders will be open, and if government is going to apply any regulations on the foreign buyers. I receive calls from my clients from abroad who are lining up right now for the investment property purchase here in Canada, because the mortgage rates are higher there. It's a less stable economy. Government doesn't support businesses there, and there's no transparency in terms of liquidable assets, what's going to happen with them. So everyone is looking for an opportunity to repark their existing funds, and they are looking into Canadian land. So go figure.
Awesome. Next question here is, after purchasing an investment property and successfully renting it out, I was able to qualify for more mortgage. How is that possible?
Thank you, Carrie. Just looking at the question again, purchasing investment property and successfully renting out, able to qualify. So in a nutshell, hard to say what were the factors looking into it, but rental property definitely considered additional income, and that's what increases the borrowing capability.
Okay. And last question here. This is from Ari. Considering taxes and commissions, at least how long do I have to hold a property to get a profit? I am looking for a Fairview area.
Thank you, Ari. And I feel bad that's the last question, but hey, you're lucky you got in. So that depends on what what was the strategy and what type of profit you expect, I would say definitely consider the capital gain. And from here, I don't see whether the property is a rental property or it's partially rented, because the taxes on the capital gain will be different. So again, strategies can be different. An investor can consider just getting a profit from a cash flow, or they consider getting profit from a capital gain. Hard to compare just from this question, but consider all the strategies and see what brings you the better back, makes you spend less time, less stressful, and move on with your decision. Use our metrics we discussed.
Yeah, for sure. Well, thank you everyone for joining us today and for participating in our live chat and our Q&A. For any questions we did not get a chance to address, a livrent agent and Katie will connect with you via email. So it is actually time to announce the winners for our giveaway for the two $50 Amazon gift cards. So our winners are Keith Ho and Quan Fung. So congratulations, guys. We'll get in touch with you on how to collect your prize. So again, thank you for joining me today, Katie, and please let everybody know where they can find you.
Thank you. Absolutely. It was a pleasure chatting with you today, Melany. And I want to thank all the participants who came today, who are actively participated. Hopefully you gained some relevant and useful information. I'm running webinars on a regular basis, and my next webinar for first-time buyers will be on July 28th at 7 p.m. Pacific time. On the registration page, you can provide suggestions for time and date if this timing doesn't work for you. And we will discuss a lot. We will basically dive deeper, because today we barely scratched the surface discussing financial options. So there will be a ton of information for first-time buyers with specific calculations on government incentive, and another webinar which tailored to what we already discussed today for investment property purchase will be on August 11th at 7 p.m. Pacific time. Again, on the registration page, leave your questions and comments on time and date if you would prefer to have a different session. We will discuss mortgage options in details there and talk more about investing in real estate.
Awesome. Well, thank you so much. And guys, make sure you subscribe to us at livrent if you haven't already, as we'll be hosting more live stream events in the future with more tips, tricks, and advice. So bye for now. Thank you, Katie.
Thank you. Bye.